Thank you, Chair, and thank you very much for coming in today. I'd like to ask you about the credit guarantee scheme in particular. And I think in your opening statement you had said that it supported that 98.2 million had been drawn down, support to 1,890 businesses. Is that correct?
Yes.
How much has been applied for?
So that has been drawn down. I'm just trying to think that number through in my head, Deputy, the number of applications. So companies apply, and we had certainly in the first stages of the scheme, a lot of companies applied and were approved but didn't draw down the funding. And that for some...
May I ask, sorry to interrupt you there, approved by SPCI or approved by the bank?
Approved by SPCI and the bank, both, but didn't draw down the funding. And in a way, that's why when I mentioned earlier, it was a much smaller drawdown in the beginning. But now we're beginning. Now there's 550 million has been drawn down. So it's a scheme, I think, where, and it reflects back even on our earlier discussions, companies really were not borrowing, they were not expanding, where now we're beginning to see that reopening up, and they're now beginning to gain access to that funding.
So do you have a number for the number then of companies that have been approved by both and are drawing down?
I think the number, just checking, just so that I have it absolutely correctly for you, up to October, 7,923.
And do you know, is there a difference then between, say, for example, the number of companies that have been approved by both and the number that have been approved by just SPCI but not a bank?
Okay, I think I'll have to come back to you on that, Deputy, just to break down those figures for you. I just don't have them immediately to hand. I could come in later perhaps with them.
And the drawdown then, you said, is 550 million. I think there was an original provision of 2 billion for this line of support. So that's now 2 years into the operation of the scheme, close to 2 years into the operation of the scheme, we've reached a quarter of the provision. And we certainly hope that we've, which doesn't necessarily need to be a target, but it did need to be there for businesses when they looked for it. Can I ask you, did you get any feedback at any stage from business about difficulties with the banks? Businesses complained to me, and I'm sure other deputies, of receiving, a long, slow process. And the worst thing of all for any business is a slow no, where they've gone through many, many months of engagement with a bank, ultimately to get a no at the end. Was that feedback that you received in the department at all?
Yes, we certainly would have had feedback that it was difficult, and part of the response we took there was to expand the amount of lenders in the scheme. So where before we just had the pillar banks, now we've included other sources like the credit unions. So we have 15 credit unions now working with us to provide that funding. I do take the point, and you mentioned there the 2 billion in lending, but it is a contingency fund, and it's not to say that the 2 billion should be drawn down or that there's a fault in the scheme if it isn't.
I appreciate that. It's not a target as such.
Yes.
But I think what you'd be watching for, though, is if you were hearing from business that it's difficult to get it, and it's not at that point. And I certainly the original figures, it was, there was a very slow drawdown at a time when you would have thought it might be most needed. So I think it's worth keeping under review. The most important thing is that it's there for business. I wonder, can you talk to me about the approaches? You've brought in the credit unions, which I thought was a very good thing to do. Was that after experiencing frustration or difficulty with the pillar banks? Because again, that's what was reflected possibly back to deputies from SMEs around the country. What was difficult? Why was it necessary to do that with the pillar banks receiving such support from the state in other ways?
I suppose it was something we puzzled on as well, because there's a very strong guarantee on the fund. But we did hear that feedback, and as I mentioned earlier, we meet regularly with our enterprise forum, and it was one of the features that came up, and it was partly as a response to that we tried to expand out, and hence the credit union's involvement, and we're seeing that as positive. I think last year was a particularly difficult year for businesses, and they simply weren't lending. And we have always, in comparison to other EU countries, our SME sector particularly tend to borrow less. It's something that we've studied at various times, and indeed the Department of Finance did a review more recently on it. So for us, it's about making sure that the funding is available and that it is there for companies and that it is accessible. And
Yes, no, I understand. Sorry.
so that was really, that's our aim. And so where it is, and then you mentioned it there, and indeed we got that feedback, I think, from yourself and indeed from other deputies. And that's why we moved to adapt it and to grow it.
And do you have figures for the proportion of applications approved by SBCI and then not facilitated by the pillar banks versus, or facilitated or not facilitated by the pillar banks and within a reasonable time frame versus the proportion that were ultimately facilitated by credit unions? Do you know the point that I'm making? Essentially the difference in treatment between the pillar banks and the credit unions.
Okay, so I think that's a piece of work that we would have some of the data, Deputy, but not necessarily all of it. We do know overall there's a refusal rate of 10% across the board, and that's acceptable from our perspective. I mean, companies have to be able to show that they can pay back, so we wouldn't ever see it as an easy option. But that type of data is one that we will be keeping, and I'll come back to you on it separately with what we have.
I appreciate it. I appreciate it's an ongoing body of work. One of the challenges highlighted by business at the initial stage was, the scheme was well flagged throughout that first summer of COVID. I think it was September 2020 when it was introduced initially, and business was waiting for it. It's fair to say they were waiting for it, notwithstanding the other EWSS, CRSS, and other supports that were available. One of the criticisms at an early stage was that it was there to finance COVID-related debt, as opposed to non-COVID related debt. So, for example, if you were a business that had taken on significant commercial loans to redevelop your business, refurbish, whatever it happened to be, the refinancing of those loans was coming due, and this scheme wasn't available to help refinance that debt, which was essentially the debt that was needed to be serviced in order to continue to operate, particularly with reduced revenue. How did you get that feedback? How did you adapt to that?
We did get the feedback, but again, this fund is part of a suite. So we had other offerings that were available to people under that needed that. But particularly, I think on the COVID one, it was specifically for COVID, and it was EU. Also included there, so there was criteria that you couldn't refinance your loans, and that was again because the offering under this was a better offering than other products, so it wasn't there to allow everybody to refinance. It was very much focused on the exigencies and the pandemic. And it was on that basis that we operate. I take your point that because of people's particular circumstances, perhaps, they were hit with something that wasn't expected.
But I suppose it's the realities of business, isn't it? And I suppose that's the difficulty when you're trying to design a scheme and you're doing it within EU parameters and you're doing it within the parameters of the department. But the reality for business is if you have a hotel or whatever, and you've redeveloped it over the previous 3 years and you have that debt, and you're fully capable of financing it based on your normal returns, your normal revenues and trading, et cetera, and then that changes because of COVID, but you haven't incurred the debt because of COVID, but you're now unable to pay it because of COVID. You can't refinance the debt because it isn't covered in that way, and you have 80 or 100 staff who are at risk, notwithstanding the other schemes, which are insufficient to cover that level of financing. From a business perspective, from an operation perspective, how do we address that?
I take your point, but remember at the time we had loan holidays for
they
companies.
Were coming to an end.
We had the Future Growth Loan Scheme, but also we were conscious too that refinancing at that stage could have resulted in bad loans being put into the scheme, and that was a concern. So it was a very tricky balance. We are still operating under this temporary state aid rules, and there's specific rules that you cannot provide assistance that's competitive against another sector, and that would have been a competition area if we had refinanced bad loans vis-a-vis others.
it was an extraordinary level of support provided to the banks, really, wasn't it? An 80% guarantee. The risk that they would have taken on with any of those loans was really very small. Feedback from businesses in my area who were largely export businesses to the Far East and so on, their concern was that the banks weren't interested in taking on any additional risk, that irrespective of the 80% backing, that the 20% just wasn't worth it to them. And they simply weren't, just simply not interested.
Well, I mentioned earlier it was MFI who were first out into the market with a COVID loan, and that was for the really small ones. But that was the response, I suppose, from the state. I can't speak for the banks, Deputy, but I hear your comments, and they're not comments that we haven't heard before. Can I just correct as well, because I did say earlier 15 credit unions are involved. It's actually 19 now. So again, it's a positive.
Okay, thank you very much.
Deputy,
Chair, do I have time or am I done?
Your time is up now.
Okay, thank you so much. Thank you.
We'll let you back
Thank you,
in.
Deputy.
Back